Hello everybody, welcome to the 29th episode of me learning how to trade using Forex. So in the last video we went through the open range breakout lesson on the direct market access course on the official forex.com, and today we're doing the direct market access course or lesson again. No, wait, this isn't the right lesson. Sorry, this is the this should be the advanced trading strategies lesson. So yeah, direct market access. Let's get started. DMA trading. Finally, let's examine an advanced method of finding and executing trades. Direct market access. What is direct market access? Direct market access is a form of Forex execution that offers traders access to deep liquidity sourced from global banks and top-tier liquidity providers, all with no additional markup. So, direct market access is a form of FX execution that offers traders access to deep liquidity sourced from global banks and top tier liquidity providers, all with no additional markup. Instead of paying a spread, traders get charged a commission for each trade. So instead of paying a spread, traders get charged a commission each trade. Direct market access brings several benefits for experienced traders, giving you greater transparency and control. With direct market access, you can see the order book from your chosen market, including orders and quotes. This is called total depth of market and offers deeper market insight, as well as the ability to trade at the best buy and sell prices provided directly by the top tier liquidity sources. Total depth of market. You can see the order book for your chosen market, including orders and quotes, offering deep market insight. As well as the ability to trade at the best buy and sell prices provided directly by the top tier liquidity sources. With Forex.com, direct market access traders also benefit from reduced commission based on the volume they trade. Volume discounts are calculated based on a 3-month rolling average, allowing you to benefit from deep discounts month over month. How does direct market access work? Direct market access works by giving you access to multiple levels of liquidity displayed in real time. Yep. You can view pricing available on either side of our order book and have the ability to execute orders from the top spreads. This allows you to gain exposure to deeper pools of liquidity with a straightforward, transparent pricing from market-leading providers. Forex.com Direct Market Access. To trade on direct market access with Forex.com, you'll need to open a direct market access account. Once it's live, you'll be able to access direct market access from our full suite of trading apps and platforms, including web trading, advanced and mobile. However, we will recommend using our web trading platform for the optimum DMA trading experience. The Forex.com Direct Market Access Deals ticket is designed to provide traders with greater visibility into the FX markets. Bear in mind, this doesn't necessarily mean that the top of the book prices will always be better than our standard pricing. Factors such as size of the trade and time of day can impact the tightness of the bid/ask spreads. We charge you a standard commission and you earn discounted commissions based on your trading volume. The more you trade, the deeper discount the following month. What type of traders use DMA? DMA is typically used by expert traders who buy and sell in large volumes and are looking to minimize costs. If you only take a couple trades each month, the product might not be for you due to the volume requirements. DMA is more suitable for professional or institutional level traders, and there are specific regulatory requirements traders must meet in some jurisdictions. DMA account holders need to hold more capital in their accounts and can forego some of the protection offered to retail traders. Damn. The direct market access is used by professional traders. Let's just write that. Benefits of direct market access. There are various advantages with direct market access, such as setting prices you want to deal at and dealing directly with other market participants. Other benefits include faster execution, forex market transparency, increased data on currency pairs, prices from a wide selection of global banks and liquidity providers, commissions instead of spread charges. Drawbacks of DMA. While DMA may be powerful, it isn't for everyone. If you're an expert trader who deals in large volumes, you might want to stick to standard account. You should also be aware that you won't necessarily find a better price with DMA. DMA accounts can't access the active trader program. The minimum trade size for DMA is 100,000. Jesus, that's a lot. Okay, so that's the last course on the Forex.com, I think, direct market access. Yep. So that's all the courses completed then. What else is there? Platform tutorials. So this is the academy, isn't it? Academy, education, news analysis. Wait, so academy, education, overview courses, glossary, self-assessment, news analysis, help us support. Right, okay, so let's go to the next tab, platform tutorials. Not really sure if I should start on this yet because I still don't think I've got good enough background information on this yet, so we're gonna skip this for now. Let's go to the lessons. This is the same as the courses, isn't it? Because Fibonacci, how to handle news of an open trade, our favorite fib, open range, scaling in and out trades, Ichimoku clouds, Gartley pattern, average true range. Yeah, we went through all of this. So, how to handle Andrew's pitchfork. Yep, we've done all of this. So this can be done. Webinars. Okay, let's do this. Follow me on Stockwits. Let's see what his articles are at. Okay, these are sort of news articles, which isn't really that helpful for me right now. Holds both his chartered financial analysis, chartered market technician. Right, okay, so not this one, glossary. Let's see what's in glossary. Oh, okay, so this is sort of the words or what they mean. Okay, this is useful. Yeah, okay. Self-assessment. Never traded anything. Let's do this. What would you like to learn about the academy? Do this. Okay, what is a margin trading? It is this. One of the best ways to protect position from a negative market move is to use a stop loss order. Day position, a scalping are all example of what trading strategies. Quiz result, intermediate. Progress through the intermediate course to gain a deeper understanding of the markets. You recommend courses. Oh yeah, we've done that already. Right, okay, so let's go back to overview. Oh, actually, let's work through these tabs, actually. Okay, I think we've just done all this, haven't we? Yep. So we've gone through this. Yep, we've done that. Popular lessons. We've done all this as well. Practice you learn. Okay, we're not doing that yet. Platform tutorials. Okay. Try demo accounts. Log into web trader. Glossary. Popular terms. Opening an account. Right. Okay. So, news and analysis. Sorry. This is just news, which is not that helpful for me right now. Yeah, not that helpful. So academy, what else is there for me to learn? Support, get started. What's in get started? Standard account, MetaTrader, DMA account. Right, okay, so that's not what I'm looking for. Yep, not what I'm looking for, so go back. Academy, let's go support. Support. Right, not this. Currency converter. What is this? Whoa, this is like a real life moving chart. Well, that's very cool. Okay, so we can see that as I move the chart along, the time frame becomes, I guess, smaller as I drag it to the left. Whoa, it's very cool, very cool. Indicators. Let's do the Ichimoku cloud. Oh wow, okay. Candles. There's a lot of stuff on here, isn't there? Right, okay, this is interesting. We'll have a look at that later. Let's see what else is on there. Margin and pip calculator. Right, okay. Service updates. Yep, okay. Market hours. Australia not trading. Normal hours. Monday, the 1st of January. What day is it today? Today is normal hours. Spot gold is silver indices are later 22 hours today. Right, okay. Frequently asked questions. Okay, so support has lots of useful stuff. So yep, support is going to be very good in later on. Let's go through this individual tab overview. I think we've gone through this before. Okay, not courses. Yep, we've gone through this before as well. Lessons. Are these going through all the tabs? If so, I don't think we need to go through them. Lessons, platform tutorials. Okay, not important. Webinars. Nope. Glossary. Okay, we've gone through that. Help and support our platforms, new clients. I think we clicked through these, haven't we? Yep. Okay. Right. So that's all the stuff on the official Forex account. Oh no, Forex.com account. Looked at. About Forex.com, trade of us, about us, careers, why us, pricing, execution, strength and trading support, regulation, currency converter, about us, careers, news analysis, latest research, trade ideas, popular topics, news analysis, financial market insights, COVID and trading, week ahead report, Forex.com analysis, financial market alerts, trade ideas, market hours, economic calculator. Okay, platforms. Not useful for me yet. Markets, pricing, execution. What does this do? Is this some sort of a lesson? Overview. Right, okay, so this is just the news basically. Okay, cool. So all the I think as much as all the Forex .com official Forex.com stuff has been looked at regarding learning, so I think we can finish with this one. Although we're going to be coming back to this later when we get a great understanding of the Forex stuff. So, but for now, we're going to close with this one. Let's look at the other tabs that we've opened. So, I guess this one from FXCM. They have an education as well. So, learn to trade. Trading station, MetaTrader 4, Trading View. About FXCM. FXCM is a leading provider of online foreign exchange trading, CFD trading related services. Right, so learn to trade. With FXCM, education is an additional expense, it's part of your investment. Become a best education. Let's go on education. Trading education. Your trading education starts here. Join live daily webinars, watch videos on demand, explore different education services. Learn about FXCM products and discover why FXCM is a Forex leader designed for traders of all levels. Live market webinars. Yep. Trading guides. Build your knowledge select from our library of in-depth trading strategy and instrument guides. New to Forex. What is Forex.com? How can you invest it? Yes, let's do this first. Okay, so this looks good. So, let's add a new row below. This is going to be called... What did I name the first row? Source name, page name, they accessed, website link. Source name. So this is going to be from FXCM. And this is called Forex Trading for Beginners. Date is 29th/01/2024. Okay, so Forex trading for beginners. Every once in a while, a good trade idea can lead to a quick and exciting payoff. But professional traders know that it takes patience and discipline to be. Forex is a commonly used abbreviation for foreign exchange. It is typically used to describe trading in the foreign exchange market, especially by investors and speculators. So, let's write that down. Forex. Commonly used abbreviation for foreign exchange. Typically used to describe trading in the foreign exchange market, especially by investors and speculators. Table of contents. What is Forex and why trade it? Why trade Forex? Putting your ideas into action, the bulls and the bears, reading the quote, making a trade, but I don't have any euros, how can I sell them? Pips, profit and leverage and loss. What is a pip? How leverage works? How to develop a strategy? What's next? Becoming a knowledgeable Forex trader. So, what is Forex and why trade it? You may not know it, but Forex is actually one of the largest markets in the world, with over $4 trillion in average daily volume transacted. This easily dwarfs the stock market. All the world's stock markets combined average only about 84 billion per day. So if the Forex is so big, why have so few people heard of it? The simple answer is you probably have used the Forex market before, either directly or indirectly. Anytime you take a trip to another country and exchange money, you just made a Forex trade. Whenever you buy something in a shop that was made in another country, you just made a Forex trade. You paid in your own currency and the manufacturers paid in different currency. You have probably already used the Forex market before, directly or indirectly, right? People trade currencies all the time, but how can currency be an investment? Here's a simple example. Imagine you took a trip from the United States to Europe in 2002. For the trip, you changed your US dollar into euros. At the end of the trip, you typically would change any extra euros back into US dollars, but what if you didn't? In 2002, 1 euro was worth about 90 US cents. Say that you decided to hold on to 500 euros and left them sitting in your desk drawer for 5 years. In 2007, you took euros to the bank and sold them for the 2007 price of $1.40. Since you bought the euros for 90 cents and sold them for $1.40, you made a 0.50 profit per euro. You'd have made $250 just because you held on to those euros and had bought and sold at the right time. That's a 55% return in 5 years. The $4 trillion Forex market mostly runs on the same idea. Many of the world's giant banks, hedge funds and insurance companies actively trade currencies as a way to make money. Since they do so in very large amounts, they record profits and losses in the millions every day for the smallest fraction of a cent movement in exchange rates. profits or losses in the millions per day. Many have not heard of Forex market because the market has historically been largely exclusive to industry professionals. The average person could buy a stock but couldn't trade currencies, so it remains solely in the hands of the big boys. Things have changed. Like the online stock trading evolution in the 1990s, the internet has brought Forex trading within reach of the average person sitting at home. Thousands of individual traders around the world can now trade currencies from their living rooms. With nothing but a computer, an internet connection and a small trading account, you can now make trading and investment decisions to buy and sell British pounds or Japanese yens at any time, day or night, Sunday through Friday. This brief guide will show you how, but first it's important to know why you should trade Forex. So, why trade Forex? Online Forex trading has become very popular in the past decade because it offers traders several advantages. Forex never sleeps, so to trade Forex. Forex never sleeps. Go long or short. So, trading goes on all around the world during different countries' business hours. You can therefore trade major currencies anytime, 24 hours per day, 5 days a week. Since there are no set exchange hours, it means that there is also something happening at almost any time of day or night. Go long or short. Unlike many other financial markets where it can be difficult to sell short, there are no limitations on shorting currencies. If you think a currency will go up, buy it. If you think it will fall, sell it. This means there is no such thing as a bear market in Forex. You can make or lose money any time. If you think it will fall, sell it. And remember, selling it means that because you think the currency is going to drop in price, you sell it at one price so that when it does drop in price, you can buy it back at a lower price, and then you keep the rest, you keep the difference as a profit. Low spread cost. Most Forex accounts trade without a commission, and there are no expensive exchange fees or data licenses. The cost of entering a trade is a spread between the buy price and the sell price, which is always displayed on your trading screen. Detailed information on charges and fees is provided in our rate card. Unmatched liquidity. Because Forex is a $4 trillion a day market, with most trading concentrated in only a few currencies, there are always a lot of people trading. This makes it easier to get in to and out of trades at any time, even in large sizes, but be mindful of increased volatility as orders may be subjected to slippage. Available leverage. You can trade Forex and CFDs on leverage. This can allow you to take advantage of even the smallest moves in market. Of course, leverage is a double-edged sword as it can significantly increase your losses as well as your gains. FXCM offers different leverage for different tradable instruments. Major currency pairs default to 30-1, non-major currency pairs gold and major indices default to 20-1. Commodities other than gold and non-major liquidity equity indices default to 10-1. Individual equities and other reference values default 5-1. International exposure. As the world becomes more and more global, investors hunt for opportunities anywhere they can. If you want to take a broad opinion and invest in another country or sell it short, Forex is an easy way to gain exposure while avoiding vagaries such as foreign security laws and financial statements in other languages. So let's start with what a basic Forex trade looks like. Putting your ideas into action. Currencies trade on an open market, just like stocks, bonds, computers, cars, and many other goods and services. A currency's value will fluctuate depending on its supply and demand, just like anything else. If something increases supply or lowers demand for a currency, that currency will fall. For example, when Greece threatened to default on its debt, it threatened the existence of the euro, and investors around the world rushed to sell euros. If something increases supply or lowers demand for a currency, the currency will fall. A currency's value will fluctuate depending on its supply and demand, just like anything else. Currencies. What value will fluctuate depending on its supply and demand? With a sudden dramatic rise in the number of euros for sale and a definite lack of demand for them, the euro dropped precipitously against the US dollar and other currencies. So because there's a high supply but a low demand, then the euro dropped price. You can buy or sell at any time and in any order. So if you think the eurozone is going to break apart, you can sell the euro and buy the dollar. If you think that the Federal Reserve is printing too much money, you can sell the dollar and buy the euro. Before you start trading, please ensure that you fully understand the risks involved. The bull and the bears. When looking at the future, many traders will have an opinion on where the currency is going. If a trader is optimistic and thinks the currency will rise, he is said to be bullish. If a trader thinks the currency will rise, it's bullish. If a trader thinks a currency will fall, it's bearish. Every day the bulls and bears do battle as the price moves as one or the other gets the upper hand. That's a nice diagram, isn't it? The green shows up and then the red shows down, and then you can see the chart goes up, the bear goes down. Our job as Forex traders is to look at the currencies available to us and to buy the strongest while selling the weakest. Look at the currencies available to and buy the strongest whilst selling the weakest. So if after reading the news you become bearish of euros and bullish of US dollars, you could trade that opinion by selling euros and buying US dollars. So always buy the strongest currency. Reading the quote and making a trade. Because you are always comparing one currency to another, Forex is quoted in pairs. This may seem confusing at first, but it is actually pretty straightforward. Below is an example of the EUR/USD quote. It shows you how much 1 euro is worth in US dollars. Let me get a picture of this beauty. Right, okay, so if you instead wanted to look at the euro in terms of the Japanese yen, you could look at the EUR/JPY rate. If you wanted to see the value of US dollar in Canadian dollars, you could look at the USD CAD. Base counter, yep. The first currency in a currency pair is a base currency. The second currency is a counter currency. When you buy or sell a currency pair, you're performing the action on the base currency. So if you are bearish of euros, you would sell EUR USD, because bear goes down. So you sell the weaker one, you sell USD. Now when selling USD, you are not only selling euros, but you're buying US dollars. If you are more bullish on the Japanese yen than you are on the US dollar, you could sell the EUR JPY instead. It's all up to you. Because if you sell, you could sell, because if you sell this, then you're buying JPY, and you could always buy the stronger currency. Let's say that you sell EUR USD at 1.4002. If the EUR USD falls, that means the euro is getting weaker and the US dollar is getting stronger. Say the EUR USD falls to 1.3522. In that case, you would have a profit. If it rose to 1.4522, you would have a loss. So just remember, if you sell a pair, down is good. If you buy a pair, up is good. Well, I need to read this again. Say that 1.4022. So you're selling the weaker currency, which is EUR. You're hoping for the USD to rise. If it rose to 4.5522, do that. Right, okay. My brain's still getting confused with this part right here. So let me just reread this again. So just remember, if you sell a pair, down is good. If you buy the pair, up is good. Right, okay. But I don't have any euros. How can I sell them? You can buy or sell anything you see active on your trading station, even if you don't have any of that currency. When trading Forex, you are speculating on the change in rates. You do this by borrowing the euros. This is standard for most Forex traders. This also allows you to access leverage, which will increase your profit and your losses. So let's look at the example again. When you sell the EUR/USD, you borrow 1,000 euros and sell them to someone else in the market, earning the equivalent of dollars. Say you did this while EUR/USD is at 1.4022. In that case, you borrowed 1,000 euros, sold them for 1,402 and 20 cents, and held on to these US dollars. 2 weeks later, you sold these US dollars when the rate was 1.3522. Since the EUR/USD price has fallen, you get more euros back at the end you borrowed. So you return the 1,000 euros you borrowed, and the remaining 36.98 euros your profit to keep. If the price has risen to 1.4522 instead, that 36.98 would instead be a loss. Your trading station will do the maths for you and apply the profit or loss directly to your account. So remember, buy currencies that are going up, sell currencies that are going down. Find the best pair to do that with. Buy currencies that are going up, sell currencies that are going down. Buy currencies going up, sell currencies going down. Find the best pair to do that with. Pips, profit, leverage and loss. Over the years, professional forex traders have come up with some shorthand to make forex trading easier so you can quickly make decisions about your trading without needing to take a calculator every time. What is a pip? A pip is a unit you count profit or loss in. Why is that highlighted? Oh, okay, that's a pip calculator. A pip is a unit you count profit or loss in. Most currency pairs, except Japanese yen pairs, are quoted to 4 decimal places. I think Japanese yen is like 5, because we read about this in the Forex.com lesson, haven't we? So this fourth spot after the decimal point, at 1/100th of a cent, is typically what one watches to count pips. Every point that place in the quote moves is 1 pip of movement. For example, if the EUR/USD rises from 1.4022 to 1.4027, the EUR/USD has risen 5 pips. If EUR/USD (1.4022) to 1.4027, has risen 5 pips. Stock indices have points, futures have ticks, forex have pips. The monetary value of a pip can vary according to the size of your trade and the currency you're trading. FXCM demo accounts typically trade in increments of lots of about 10,000. A pip in a standard demo account in EUR/USD is worth $1 per lot. If you're trading 3 lots, you would have 3 pips of profit or loss per pip. 3 pips of profit or loss per pip the EUR/USD moves, and therefore $3 of profit or loss. The pip, so you can see this is the 1, 2, 3, 4 value here. Some currency pairs will have different pip values. For example, the Euro Japan yen pips are valued in Japanese yen. USD CAD pips are in Canadian dollars, and so on. Once again, your trading station makes it all easier by doing the maths for you. So gross profit loss. How leverage works. As mentioned above, all trades are executed using borrowed money. This allows you to take advantage of leverage. Leverage 30-to-1 for major currency pairs allows you to trade with 10,000 in the bank in the market by setting aside only 334 as security deposit. (334) as a security deposit. This means that you can take advantage of even the smallest movement in currencies by controlling more money in the market than you have in your account. While leverage can be advantageous in increasing profits, it can also significantly increase your losses when trading, so it should be also used with caution. Start trading small sizes so you don't take on too much risk. Leverage is a double-edged sword. Like with profit and loss, the trading station keeps track of margin for you. Used margin is how much money you have set aside to secure your open trades. Usable margin is money left in your account to open new trades or to absorb losses. So used margin is how much money you have set aside to secure your open trades. Usable margin is money left in your account to open new trades or absorb losses. Always make sure that you have plenty of usable margin, otherwise you may get a margin call. If your usable margin gets low, you should close some trades or deposit money into your account. How to develop a strategy. So now you know what Forex traders do all day and night. Seems pretty simple, right? Buy rising currencies and sell falling ones. What's next? Demo accounts becoming large. You get once on the demo, you can start buying currencies you think will rise and sell the ones you think will fall. Remember that all the demo accounts attempt to replicate real markets. They operate in a simulated market environment, and there are key differences that distinguish them from real accounts, including but not limited to the lack of dependence on real-time market liquidity, a delay in pricing, and the availability of some products, which may not be tradable on live accounts. But how do you know which currencies will rise and which will fall? Over the years, Forex traders have developed several methods for figuring out how far currencies will go. How to methods for finding out which currencies will rise or fall. Fundamental analysis, technical analysis, money management. Remember, the fundamental analysis, I think, looks around the news for any reasons or factors a currency's value is going to rise or fall. Technical analysis only looks at the charts, like recognizing candlestick patterns, that sort of thing. I think this is right. Since the currency trading market, you can look at supply and demand. This is called fundamental analysis. Interest rates, economic growth, employment, inflation, political risk are all factors that can affect supply and demand for currencies. Yep. Technical price charts tells you many stories, and most Forex traders depend on them in making their trade decisions. Charts can point out trends and important price points where traders can enter and exit market if you know how to read them. Money management, an essential part of trading. All traders need to know how to measure their potential risk and rewards, and use this to judge entries, exits, and trade sizes. There are several important skills needed in order to become a Forex trader, and like all skills, learning them takes a bit of time and practice. We have grouped all these needed skills together into an interactive trading course. You can learn how to analyze and trade the market from experienced instructors and traders. They teach using video on-demand lessons, and live office hours are available, so you can get personal feedback, study on any schedule, and learn at your own pace. And the best part is it's free. All you need to do is show that you're serious about getting into trade. All you need to do is show that you're serious about getting into the world's largest market. Open a live trading account with FXCM and you'll become a real trader with real money. You'll have unlimited free access to the course, as well as tools such as charts, research, and trading signals. Wow, okay, so that's the first bit of the done. Forex trading for beginners. Okay, so I'm gonna leave this episode here. Thank you guys for watching. And in the next video we're going to be carrying on going through all the lessons, lectures available on this website. So yeah, I'll see you next time. Peace out, guys.